Dyson, the stage is yours.
Thank you. Okay, so let's talk about who has the power to create money. If I ask you who creates the money that is in your pocket right now, you can take a guess. Anybody want to guess? Well, so in Poland it would be the National Bank of Poland. In the UK it's the Bank of England. Most people, when you ask them who creates money, they think of the national central bank of that country, working on behalf of the government. Well, who creates electronic money? Because this is the kind of money that most of us use every day, more than we actually use physical cash. Most of this electronic money only exists as numbers in computer systems. And who it's created by is quite interesting. This is a paper from the Bank of England that was released in 2014. And this is what they say. Commercial banks create money in the form of bank deposits by making new loans. Bank deposits are those numbers that you see when you check your bank balance. When a bank makes a loan, for example, to someone taking out a mortgage to buy a house, it does not typically do so by giving them thousands of pounds worth of banknotes. Instead, it credits their bank account with a bank deposit the size of the mortgage. At that moment, new money is created. So most money that exists in the current system is created not by the central bank, but by one of the high street banks, one of the banks that you have your account with, whenever somebody goes into debt. So banks create bank deposits. The government, through the central bank, creates notes and coins, physical money. In the UK, bank deposits make up 97% of all the money that exists. In cash is just 3%. In Poland, it's 87% of money is in the form of bank deposits, 13% in the form of cash. This is a chart for the UK. It shows you how much money banks have created since 1963. And you can see it really accelerates in the year before the years before the financial crisis. And because they create money when they make loans, they also create debt as well. And you can see this red line is the debt that was created by banks in the UK. The situation in Poland is similar. This chart from the National Bank of Poland starts in 1996. So it shows everything relative to 1996. And the amount of money that has been created by the banking system in Poland has increased by 10 times in the last 20 years. We have the same financial system in every country in the world, with some small differences, but essentially in the world today, money is created by banks when they make loans. So what happens when those loans are repaid? When people make payments on their debt? This is the Bank of England again. They say, just as taking out a new loan creates money, the repayment of bank loans destroys money. Banks making loans and consumers repaying them are the most significant ways in which bank deposits are created and destroyed in the modern economy. So you go into debt and new money is created, and when you repay that debt, the money just disappears from the economy. So in terms of where is the power to create money, most people think that the power to create money belongs to the state. And in reality, that power really now is with the banks. What do they do with that power to create money? Well, a lot of people have this idea of banking where a bank takes savings from members of the public and they then go and lend it to businesses. And the idea is that this helps those businesses grow, it helps them create jobs, and it keeps the economy going. And this is what you learn in a lot of even degree-level economics courses that this is how banking works. In reality, lending to businesses is a tiny part of what banks do today. In the UK, it's just 8% of the lending that they do goes to businesses. Another 8% goes to credit cards and personal loans. 31% goes to other parts of the financial sector. And 51% goes into property, so into mortgages and loans for office buildings. So most of what banking does now in the UK is lending to the property market. This is for Poland, and you can see again that the bank lending to property is easily the biggest part of what banks do. They do lend more to businesses than the banks in the UK, but lending for property and for consumer debt is much bigger than lending to businesses. Okay, so the consequences of allowing banks to create money in this way. So, firstly, because they lend so much to the property market, one of the effects of this is to push up the cost of housing and to make it more expensive to either buy or to rent the place where you live. That also leads to high household debt, both in terms of mortgages, but also people take on more consumer loans and mortgages and credit cards. And when you have high house prices and high household debt, that increases the level of inequality. High household debt plus inequality, there's a lot of academic research now showing that this is the foundation for a financial crisis. And this is Adair Turner, who was the chairman of the regulator of the banks in the UK. He said the financial crisis of 2007-2008 occurred because we failed to constrain the private financial system's creation of private credit and money. So then financial crisis leads to recession. People lose their jobs. That increases inequality even further. It's often the poorest people who lose their jobs first. When there are fewer people working and more people unemployed, then government finances deteriorate. They take in less revenue, less tax, and they have to pay out more for unemployment benefits. This eventually leads to austerity, which further increases unemployment, further increases inequality. And ultimately, the government can no longer do what it was elected to do because of austerity and because it has to focus its resources on the financial crisis rather than improving the economy and society. And also, quite often, the government will say, "Well, look, we have to focus on improving the economy now, on economic recovery. We can't really afford to protect the environment right now." So, what should we do about this power to create money? The organisation that I work for, Positive Money, we argue that really we should look at the root of the problem. And many of these problems come from the fact that banks are able to create money. Obviously, there are many other problems as well. There are problems with the tax system, with the political system, with the chances that people have through the education system. But we can trace many of these big social and economic problems back to this ability that the system has to create money. So we would argue that we should take the power to create money away from the banks and bring it back to the state, so that only the central bank would be allowed to create money. Obviously, you want to make sure this is done in a transparent way, so that everybody can see how this power is being used. You need to make sure it's democratic, that it's accountable to Parliament, and that this power is used in the public interest. And there's kind of two proposals, really, for how the state could use its power to create money more productively. And these are there's a big academic debate at the moment about these proposals. And the first one is that the central bank could create money and actually put it into the real economy through financing, for example, the state's investment in public transport, renewable energy, anything to reduce the level of pollution and the level of carbon that the economy creates. So, for example, the quantitative easing, which has been used by the Federal Reserve, by the Bank of England, and also now by the European Central Bank, involves the central bank creating huge sums of money electronically, effectively out of nothing, and then putting that money into the financial markets. And what this does is it pushes up the price of those assets in those markets, so it makes the people who own those assets much wealthier. The problem is that those assets tend to be owned mainly by the top 10 or 20% of the population. So it makes the rich richer, and it doesn't do much for everybody else. So there's a big economic debate now where a lot of academics are saying it would be better to create that money through the central bank, but then put it into the real economy, either for public investment. So you may hear of ideas such as quantitative easing for the people, green quantitative easing to finance green investment, quantitative easing for infrastructure, and then the alternative idea is what is sometimes called a citizen's dividend, but sounds quite similar to basic income, which we will obviously be talking about tomorrow. And this is an idea that's becoming quite popular in Europe now, under the term helicopter money. The idea is that the central bank would create money and actually just give it to every single citizen. So the money that they are creating through quantitative easing, that the European Central Bank is creating, if it was given to every citizen of the Eurozone, it would be 175 euros per person per month over the course of about 2 years. So if you give this money directly to people instead of putting it into the financial markets, you'll have an economic recovery much, much quicker than the current policy is working. We would go further and we would say you should stop banks creating money completely. And we have some very detailed proposals about how you could do that. I don't have time to explain them today, but I would recommend, if you are interested, look on the Positive Money website, and we have a lot of information about how this could be done. So I just want to talk a bit about the international campaign. There's a big campaign now to change the way that money is created. And in Switzerland, for example, because Switzerland has this direct democracy, and they can force a referendum, so they got 112,000 signatures, and they have secured a referendum on removing the power to create money from the banks. Now, Switzerland last Sunday had a referendum on whether to implement basic income. The government opposed it, and I think it was about 75% of people voted against it. But it's not, the fact that it was not successful is not a bad thing, because it brought so much attention to this discussion of basic income, so much publicity in the international press, that it really moved the debate forward. And realistically, the chances of this referendum passing are quite slim. But again, this is something that gets the Financial Times and the Wall Street Journal and all of this kind of international economic debate really, really interested. In the Netherlands, they did a petition. They got 113,000 signatures, and that has led to a debate in Parliament. And now I think the Parliament has commissioned a bit of an investigation into this idea of stopping banks creating money and transferring that power back to the public. In Iceland, Iceland is obviously a very small country, but they have a huge banking sector relative to the size of the country, and they had a huge financial crisis as well. They were hit very hard. So in Iceland, the Prime Minister there commissioned an investigation into, again, into this idea of transferring the power to create money back to the state. And this report came out about a year ago, and then there's, they're taking that further, looking into doing a feasibility study to investigate the possibility and the benefits of doing this. And then, so this is the international movement. There are maybe 20 different campaigns around the world for this kind of reform. And if you do want to get involved in that, because there are some groups starting in Poland, but we don't have officially somebody from Poland in the network yet. So if anybody is interested in starting something, then do speak to me. You can also find out more about that international campaign at International Money Reform. And if you want to learn more about the way the monetary system works and the problems that it causes, then I really recommend you visit the Positive Money website. We have a lot of videos on there, different lectures, but also animations about the way the system works. We produced a 50-minute animation explaining how the banking system works, just for the general public, and it was so successful that it's now being used in some universities in the UK to teach how banking really works, rather than going on the old and incorrect textbooks.
Thank you for sharing.